Good afternoon, everyone. Welcome to my video analysis for the precious metals market. I'm JR, and today's Tuesday, December 22nd, 4:33 p.m. Eastern Standard Time. I wanted to put this very quick analysis together. I'm only going to do long-term time frames. I've already done my last two videos, which really go over what I'm expecting within the precious metals market and where I expect the lows. I'm just going to reiterate a few of these things very quickly. Obviously, early next year, I'll have an end of the year analysis for the precious metals market. I think 2016 is going to bring a lot of excitement into this market. The market's really been fairly boring for the last couple of years. And but I think we're going to have a change. I've done some research, and by the way, we had the rate hike last week. Nothing too crazy. As a matter of fact, gold ended up going up about $10 that day, $11. So we had a positive day that day. And besides that, we didn't see the sell-off that a lot of people anticipated. Myself, I was actually, and I think I've said it a few times, I really expected the metals to go down a bit, but I didn't expect them to tank, simply because I figured the market already had priced in the rate hike. Now, with that said, historically speaking, the last few rate hikes that the Federal Reserve had, this was more than 10 years ago. The last few rate hikes, gold did not perform for an average of about 60 to 90 days, and after 90 days, gold did perform. So, contrary to popular belief, precious metals do not go down simply because interest rates are going up. If anything, that just gives the market a little bit more order, and I think that's what's going to happen. I think you're going to see a big move in the precious metals market. Probably within the next 3 to 4 months, you're going to see a really nice move to the upside. But I am expecting one more dip to the downside, as I will show on my analysis, on my ratio analysis. So again, without further ado, let's get to the analysis. Monthly chart here on gold. This is the key level here. As you can see, this chart is going back all the way to 1967. You saw a high back in 1969, and what we saw was, and I've already gone through this, right? What we built was a giant cup and handle formation. There's the formation. You had a big move to the upside. You find support exactly where you left off, right here, roughly around 685. This was back between 2006 and 2008, right? So what happens within that cup and handle formation, as with most cup and handle formations, you have a tremendous move to the upside. This move went from 1,000 and 1,900, so it was really a move that almost doubled the prices of gold, right? That move was literally in a 2-year move. Now what you see here is I'm looking to find some resistance at this area, exactly like we did here. So just as we found resistance, I expect to find resistance exactly where this breakout is. This breakout happened at around 988. I've already said that you can have a move down to, let's say, 950, 970. But ultimately, this whole area becomes support between 970 all the way up to 1030. All right, you had the big move, so now I'm expecting the market to hold at this level. Can this market take off from here? Absolutely. I don't expect it. I expect this market to continue to follow this channel here until we reach this level here around $1,000. Let's say an average price of about $1,000, and that's when I expect the move to go high, real high up in this area here. And I do expect to surpass this level here. At that point, we'll have another giant level of resistance. At that point, I would expect a break above this level, 1,800, 1,900. I would expect a move to at least 3,000 to 4,000 within, again, these are long-term charts, these are monthly charts, so it could be another 2 years before we see that big move to the upside where we test this level here, and then another 2 years where we see $4,000 or $5,000 in gold prices. Yes, it sounds crazy, but again, technicals don't lie because they cannot talk, these charts, right? So This is my most recent trade here. After the Fed meeting, again, we saw the move to the upside. When the market came back down to 10.57, I anticipated a move down to at least 10.50, risking around $10, going in at 10.50, having a stop loss around 10.37. Look what the market did. Tested, actually saw a low of 10.47. We got in at 10.50. And the market already went up to 10.79. Right now is stable at 10.72. So risking $10, already up $30. So again, this is the only way to trade. At this point, I've already taken some profits here, and we'll see if we can continue to go higher and get better odds, better returns, right? You see this formation, this cup and handle formation, and this is where we're going to look to find some support. I have another example here. That I took advantage. Look at this is the Australian dollar. This is the US dollar versus the Canadian dollar. So we can see another cup and handle formation here on this chart, right? There's your cup, there's your handle right here, and there's the breakout. So the breakout is right here, okay? So what happened here? Market goes up, comes back down, retests this level here, all right? In this case, it was 128. And I'll highlight this trade here. This is a phenomenal trade, and this is why I want everyone to pay very close attention to this gold trade here, because this is exactly the same scenario we saw here back in October of this year. We had a move up, then we had a move come back down, and again tested this area of support. This was where the cup and handle formation broke out. This is the level I was able to get in. And this is just to show you guys that these technicals, they play out. When they play out, great. And when they don't play out, even better. Because again, what you do is risk versus reward, right? So you're risking, let's say you risk 1 or 2 or 3 or 4, 5% of your account. It doesn't matter what you trade. You're looking to make 3, 4, 5, 6, 7, 8 times fold of that one trade. So in this trade here, I got in at around 128.97, okay? And look what the market did. Now, again, I'm risking around here about 100 points on this area here, this red area, but my target is much higher because I'm trading it against the higher time frame. So again, I wrote here comments very bullish on bigger time frames. This could go up really, 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 really high, right? Look what happens. So we load the chart, and actually this stops recording here because this is only a 4-hour chart, but it stopped recording at 132. But as you can see here, I always put comments, okay? Took some profits. I actually took some profits over here at around 131, and the remaining positions I left it to run. Price is now at 137. This was right before the Fed hike. I wanted to get out and call it a day. So again, risking 1, I made over 800 points on this. Risking 100 points, I made 800 points. So this is the way to do this. So again, with the same scenario here with the gold scenario, what you're looking to do is you're looking to trade about, let's say 50, 60, 70 points, but ultimately you're looking to make 10 times that trade. These trades don't come very often, and we definitely want to take them when we have them, okay? I was able to take advantage of that position. I took that trade from this area here all the way to 137. So again, risking this amount here. This was the break of the cup and handle. So risking this amount right here. That was the risk. This is the returns. I took profits at 137 right here. So risking this little bit, this is what I came out with. So again, these cup and handles formations, they're phenomenal. If they don't work out, great. You lose 1%, 2%. Big deal, because again, the game is all about risk versus reward. Now silver, same scenario with silver. Silver, let's look at the 1-month chart. Again, this is where, for silver is a little bit trickier. Because again, if you played this trade here, you lost. Not a big deal, you have another opportunity here. So the market is giving us another opportunity right here and right here. So it doesn't matter if you get stopped out here because the next opportunity is here. All right. Now, again, silver, same scenario. You really can't see it, but this is where the level of support is right here. These little dots, you really can't see them. I'll try to zoom in a little bit so you guys have a better idea. But ultimately, this is what it is. You have the big move. You have the break. The market goes up. You buy over here. Maybe you took some profits up here. but it got stopped out here, or you got stopped out at profits if you took that trade. Because as you can see, the market did move in your favor, it just didn't hold. So now we have the same situation. We have this level here around $14, where again, a break below this level here will probably send us down to the $12 range. But again, ultimately, this is the level where you want to start getting in. Based on a couple of different analysis, it looks like silver is finally carving out a bottom. Maybe one more dip. And the dip, I think we're going to have another dip simply because of the gold and silver ratios. Now, in my previous video, I think I made a little bit more of a detailed analysis. But as you can see, this is the gold to silver ratio. The more gold, the more ounces of silver gold can buy, the more bullish it is for silver. Right now, we're trading it at 775, which means 1 ounce of gold will buy you 75 ounces of silver. Okay. Now we have a broadening formation here, which is a very bearish formation. As you can see, when we see the highs in the ratios, we see a lows on silver. When we see a low on the ratios, you see a high on silver. Last time we saw the ratios at 31, silver was trading at 49.5. Last time we saw the ratios at 83. Silver was trading in at $8. So I don't expect to create another a lower low, but I do expect silver to do one more move to the downside, maybe $12, maybe $11. At this point, you're risking $2 to $3, but the move to the upside, you're looking to 5 to 7 to 8 times fold, even more if the market continues to do what we expect it to do. So again, as you can see, we're expecting for one move up to the upside here on the ratios. That would probably bring gold and silver down. Gold maybe to 1020, maybe 1,000. It'll probably bring silver down to $12, maybe $11. But again, once this ratio hits around 85 to 87, you want to buy the crap out of silver. And what you want to do is you want to allow this ratio to start adjusting, go back down to this level here. Very exciting market. I hope you guys are excited about 2016. I hope you guys had a great 2015. And I hope you guys have happy holidays. Whatever it is that you celebrate, I hope you have a phenomenal time. I hope you're able to spend some quality time with the families, maybe family members that we haven't seen. And besides that, Happy New Year, happy holidays. We'll see you in 2016, and we'll see you next time. Thanks for joining me. Bye-bye.